Ready to test your real estate knowledge? This video features 30 challenging real estate exam questions, the kind that can make or break your score. Take your time, think carefully, and see how many you can get right. And don't miss what's happening in the bottom corner. Every question has a unique code you can enter at Birdsy AI for instant help and deeper explanations. Let's get started.
Let's start with a few questions about real estate contracts, purchase agreements, and contingencies. What is a common contingency found in real estate purchase agreements? Is it A, title insurance contingency, B, financing contingency, C, closing date contingency, or D, appraisal waiver contingency? The answer is B, financing contingency. A financing contingency allows the buyer to back out of the contract if they cannot secure a loan. This is crucial to protect buyers who depend on financing to complete the purchase. Which of the following actions can a buyer take if an inspection contingency reveals significant issues? Is it A, automatically terminate the contract, B, proceed with the purchase without changes, C, negotiate repairs or a price reduction, or D, ignore the inspection results? The answer is C, negotiate repairs or a price reduction. If an inspection reveals significant issues, the buyer can negotiate repairs or a price reduction, cancel the contract, or proceed with the purchase as is. This provides flexibility based on inspection results.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to Birdsy AI for immediate help and a free study session with Birdsy, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
In a purchase agreement, what does an appraisal contingency protect against? Is it A, the property appraising below the purchase price, B, the buyer's inability to obtain financing, C, the seller backing out of the agreement, or D, unexpected title issues? The answer is A, the property appraising below the purchase price. An appraisal contingency protects the buyer if the property's appraised value is less than the purchase price. It allows the buyer to renegotiate or withdraw without penalty if the property is overvalued. Option contracts and right of first refusal. What is a primary characteristic of an option contract in real estate? Is it A, it obligates the buyer to purchase the property, B, it gives the buyer the right to purchase the property within a specified period, C, it requires the seller to sell the property to any buyer, or D, it is a binding agreement for both parties to complete the transaction? The answer is B, it gives the buyer the right to purchase the property within a specified period. An option contract grants the buyer the exclusive right to purchase the property within a specified period, but they are not obligated to do so. This provides flexibility to the buyer. How does a right of first refusal differ from an option contract? Is it A, it allows the holder to match any offer received by the seller, B, it obligates the holder to purchase the property at a set price, C, it requires the seller to sell the property to the holder at any time, or D, it automatically transfers ownership to the holder? The answer is A, it allows the holder to match any offer received by the seller. A right of first refusal allows the holder to match any offer the seller receives, whereas an option contract gives the holder the right to purchase at a pre-agreed price. Which scenario best illustrates a right of first refusal in real estate? Is it A, a buyer can purchase the property at any time for a fixed price, B, a seller must sell the property to the first interested buyer, C, a tenant can match any offer the landlord receives before the property is sold, or D, a buyer signs a contract to purchase the property within 30 days? The answer is C. A tenant can match any offer the landlord receives before the property is sold. A right of first refusal allows the holder to decide whether to purchase the property by matching an offer received by the seller, ensuring they have the first opportunity to buy. Breach of contract and remedies. In a real estate contract, what is the most common legal remedy for a seller when the buyer breaches the contract by failing to close the transaction? Is it A, specific performance, B, monetary damages, C, rescission, or D, liquidated damages? The answer is B, monetary damages. When a buyer breaches a real estate contract, the seller commonly seeks monetary damages to cover losses incurred. This remedy compensates the seller for financial harm caused by the breach. Which of the following is a typical remedy for a buyer if a seller breaches a real estate contract by refusing to transfer the property? Is it A, specific performance, B, punitive damages, C, nominal damages, or D, rescission? The answer is A, specific performance. Specific performance is a common remedy for buyers, compelling the seller to complete the property transfer as initially agreed upon in the contract. Let's continue with property rights and transfers. Bundle of rights and fee simple ownership. What is the primary difference between fee simple ownership and leasehold estate in terms of property rights? Is it A, fee simple ownership is temporary, while leasehold is permanent? B, fee simple ownership provides indefinite rights, whereas leasehold is temporary? C, leasehold estates include the right to sell the property? Or D, leasehold estates include all the bundle of rights? The answer is B, fee simple ownership provides indefinite rights, whereas leasehold is temporary. Fee simple ownership grants the owner complete control over the property indefinitely, whereas a leasehold estate provides temporary rights to use and occupy the property under specific conditions. Which right is not typically included in the bundle of rights associated with fee simple ownership? Is it A, right of possession, B, right of exclusion, C, right to tax, or D, right of disposition? The answer is C, right to tax. The right to tax is not part of the bundle of rights in fee simple ownership. The bundle typically includes possession, control, exclusion, enjoyment, and disposition. How does the right of enjoyment in the bundle of rights affect fee simple ownership? Is it A, it allows owners to use their property without interference? B, it grants the ability to sell the property? C, it limits the use of the property to residential purposes only? Or D, it allows the government to impose zoning laws? The answer is A, it allows owners to use their property without interference. The right of enjoyment allows property owners to use their property in any legal manner they desire, ensuring they can benefit from the property without interference.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsy.
Deeds and title transfer. Which type of deed provides the greatest protection to the grantee in a real estate transaction? Is it A, general warranty deed, B, quitclaim deed, C, special warranty deed, or D, bargain and sale deed? The answer is A, general warranty deed. A general warranty deed offers the most comprehensive protection, guaranteeing the title against all claims. It assures the grantee that the title is free from defects, regardless of when they arose. What is the primary purpose of recording a deed in the public records? Is it A, to increase the property's value, B, to provide public notice of ownership, C, to reduce property taxes, or D, to transfer personal property? The answer is B, to provide public notice of ownership. Recording a deed provides public notice of ownership, establishing a legal claim and protecting against future claims. It ensures transparency and prevents fraudulent transfers of property. What is a cloud on the title, and how can it affect a property transfer? Is it A, a clear title without issues? B, a legal document for transfer? C, an encumbrance affecting transferability? Or D, a type of insurance for titles? The answer is C, an encumbrance affecting transferability. A cloud on the title is a claim or encumbrance that may affect the owner's ability to transfer the property. It can complicate or delay the sale until resolved or cleared. Title insurance and defects. Which type of title insurance policy protects the buyer against defects in the title that were not discovered during a title search? Is it A, lender's policy? B, owner's policy? C, leasehold policy? Or D, easement policy? The answer is B, owner's policy. An owner's title insurance policy protects the buyer from undiscovered defects in the title. It covers issues like forgery, undisclosed heirs, or errors in public records, ensuring the buyer's ownership rights. What is a common defect that title insurance might protect against? Is it A, property tax liens? B, zoning violations? C, environmental hazards? Or D, undisclosed heirs? The answer is D, undisclosed heirs. Title insurance can protect against defects like undisclosed heirs. These are individuals who may have a legal claim to the property but were not identified during the title search. Let's review a few questions on leases and property management. Types of leases and provisions. What type of lease typically includes a provision where the tenant pays a base rent plus a percentage of their business revenue? Is it A, gross lease? B, net lease? C, percentage lease? Or D, triple net lease? The answer is C, percentage lease. A percentage lease requires the tenant to pay a base rent plus a percentage of their gross sales. This type of lease is common in retail properties where tenant sales can fluctuate. Which lease provision allows a tenant to terminate the lease early under specific conditions? Is it A, option clause? B, escape clause? C, acceleration clause? Or D, assignment clause? The answer is B, escape clause. An escape clause permits a tenant to terminate the lease before its expiration under agreed-upon conditions, such as job relocation or changes in business circumstances. In which type of lease does the tenant agree to pay all property expenses, including taxes, insurance, and maintenance? Is it A, gross lease? B, percentage lease? C, net lease? Or D, triple net lease? The answer is D, triple net lease. A triple net lease requires the tenant to cover all operating expenses, offering the landlord a predictable income stream while transferring most financial responsibilities to the tenant. Tenant rights and evictions. What is the primary legal requirement a landlord must fulfill before initiating an eviction process? Is it A, verbal warning? B, written notice? C, phone call? Or D, email notification? The answer is B, written notice. Before initiating an eviction, a landlord must provide the tenant with a written notice. This serves as a formal communication and is legally required to ensure the tenant is aware of the landlord's intentions. Under what circumstance can a tenant legally withhold rent without facing eviction? Is it A, disagreement over lease terms? B, personal financial hardship? C, landlord's failure to make necessary repairs? Or D, desire to move out early? The answer is C, landlord's failure to make necessary repairs. A tenant can withhold rent if the landlord fails to make necessary repairs, making the property uninhabitable. This action must align with local laws and be documented properly.
Stuck on a question? Just think of the Birdsy link in the description as your friendly neighborhood superhero, swooping in to save the day with answers. Feel free to explore it now and return to continue. Simply hit pause, and we'll be waiting when you get back.
Ready to test your real estate math and calculation skills? Proration of property taxes and expenses. A property tax bill of $3,600 is due annually, and the seller is closing on March 15th. How much of the property tax is the seller responsible for, assuming a 365-day year? Is it A, $900, B, $735, C, $1,200, or D, $600? The answer is B, $735. To calculate the seller's responsibility, divide the annual tax by 365 to find the daily rate. Multiply the daily rate by the number of days from January 1st to March 15. A property is sold on November 10th. The seller has not paid the annual property tax of $5,000. How much does the seller owe the buyer at closing? Is it A, $4,166.67, B, $833.33, C, $5,000, or D, $2,500? The answer is A, $4,166.67. The seller owes the buyer for the taxes from January 1st to November 10. Calculate the daily rate and multiply by the number of days to find the owed amount. A property is sold on July 20th, and the annual property tax is $4,200 paid in advance on January 1st. How much does the buyer owe the seller at closing, assuming a 365-day year? Is it A, $1,200, B, $1,400, C, $1,750, or D, $2,000? The answer is C, $1,750. Since the tax is paid in advance, the buyer owes the seller for the remaining days of the year. Calculate the daily tax rate and multiply by the number of days from July 20th to December 31. Calculating net operating income. A property generates $100,000 in gross rental income annually and has operating expenses of $30,000. What is the net operating income? Is it A, $50,000, B, $70,000, C, $100,000, or D, $30,000? The answer is B, $70,000. Net operating income is calculated by subtracting operating expenses from gross rental income. In this case, $100,000 minus $30,000 equals $70,000. If a property has a gross rental income of $150,000 and operating expenses of $50,000, what is the property's net operating income? Is it A, $200,000, B, $50,000, C, $100,000, or D, $150,000? The answer is C, $100,000. NOI is the result of subtracting operating expenses from gross rental income. Here, $150,000 minus $50,000 equals $100,000. Now let's see if you have a grasp on some specialized real estate knowledge. Real estate investment analysis. What is the primary purpose of a capitalization rate in real estate investment analysis? Is it A, to determine the property tax rate, B, to calculate depreciation, C, to estimate the rate of return on investment, or D, to measure the building's energy efficiency? The answer is C, to estimate the rate of return on investment. The capitalization rate, or cap rate, is used to estimate the investor's potential return on investment. It is calculated by dividing the net operating income by the property value. Which of the following best describes the concept of cash-on-cash return in real estate? Is it A, the total profit from the sale of a property, B, the annual return on the actual cash invested, C, the total rental income received from a property, or D, the property's operating expenses divided by net income? The answer is B, the annual return on the actual cash invested. Cash-on-cash return measures the annual return the investor made on the property in relation to the amount of mortgage paid during the same year. In real estate investment analysis, what does the term internal rate of return refer to? Is it A, the rate at which the net present value of cash flows equals zero, B, the current interest rate on a mortgage loan, C, the annual growth rate of property value, or D, the percentage of property income reinvested? The answer is A, the rate at which the net present value of cash flows equals zero. IRR is the discount rate that makes the net present value of all cash flows from the investment equal to zero, indicating the investment's profitability over time. Timeshares and vacation properties. What is a primary benefit of purchasing a timeshare property? Is it A, complete ownership of the property, B, guaranteed vacation time each year, C, ability to sell the property at any time, or D, no maintenance fees? The answer is B, guaranteed vacation time each year. Timeshares allow individuals to own a share of a vacation property, providing guaranteed vacation time each year without the full cost and responsibilities of sole ownership.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit Birdsy AI for complimentary study sessions with Birdsy, your AI-powered study partner.